let's address some common misconceptions about pre-approval. First, pre-approval guarantees loan approval. Many people mistakenly believe that pre-approval guarantees they will receive the mortgage. However, pre-approval is based on an initial review of your financial situation and creditworthiness. Final loan approval depends on a more thorough evaluation, including an appraisal of the property and verifying your financial status at closing. 2. Pre-approval and pre-qualification are the same. Pre-approval and pre-qualification are often confused, but not the same. Pre-qualification is an informed assessment of how much you can borrow based on self-reported information. Pre-approval, however, involves a formal review of your financial documents and a credit check, providing a more accurate picture of your borrowing capacity. 3. Pre-approval is a lengthy process. Some believe getting pre-approved is time-consuming and complicated. While it does require gathering financial documents and undergoing a credit check, the process can often be completed in just a few days or a week, especially with the help of a knowledgeable lender. 4. Pre-approval hurts your credit score significantly. While a hard credit inquiry is part of the pre-approval process and can impact your credit score, the effect is usually minimal. Multiple inquiries within a short period, typically 14 to 45 days, are often treated as a single inquiry by credit scoring models. So shopping around for the best rate is not as detrimental as some might think. 5. Only first-time buyers need pre-approval. Pre-approval benefits all buyers, not just first-time home buyers. Whether you're purchasing your first home or your fifth, having a pre-approval letter shows sellers that you are serious and a qualified buyer, giving you a competitive edge in a hot market. 6. Pre-approval amount is the same as your budget. Receiving a pre-approval for a certain amount doesn't mean you should borrow the maximum. Consider your lifestyle, financial goals, and comfort level with monthly payments when determining how much to borrow. Just because you're approved for a certain amount doesn't mean it's the best financial decision for you. 7. You can't be pre-approved with bad credit. While having good credit can make the pre-approval process smoother and result in better terms, getting pre-approved with less than perfect credit is still possible. Different lenders have varying criteria, and some specialize in working with borrowers with lower credit scores. It might involve providing more documentation or paying a higher interest rate, but options are available. 8. Pre-approval lasts indefinitely. Pre-approval letters typically have an expiration date, usually between 60 to 90 days. This is because your financial situation and the housing market can change. If your pre-approval expires, you'll need to go through the process again to ensure your financial status is still in line with the lender's requirements. 9. Pre-approval locks in your interest rates. Pre-approval does not lock in your interest rates. The interest rate will be determined when you apply for your actual mortgage, which market conditions can influence at that time. To lock in a rate, you'll need to work with your lender to secure it during the loan application process. By understanding and dispelling these common misconceptions, you'll be better prepared for the pre-approval process and more confident in your journey toward home ownership. At First Nation Financial, we understand how to navigate the mortgage.